Good morning, listeners, and welcome to the Trade Talk podcast. The last week saw a volatile trading session in the benchmark indices. After rollercoaster momentum, Nifty closed down nearly 400 points and Sensex was down more than 1,500 points. Rising crude oil prices and uncertain global outlook continue to be a major concern for investors. Among sectors, during the week, the metal index outperformed over 7%. On the other hand, there was a sharp sell-off in auto and banking stocks. As a result, the auto index corrected more than 9% and banking index, Bank Nifty, lost over 5.63%. Technically, a sharp pullback rally in Nifty and Sensex took the resistance around 16,800 levels, and thereafter we saw one more round of correction in the market. It made some attempt to overcome the levels of 16,800, but it completely failed due to continuous profit booking or liquidation of long positions at higher levels. The market structure is still weak and the index is still maintaining lower top, lower bottom series, which supports the short-term weakness. However, due to temporary oversold conditions, a strong possibility of a quick pullback rally cannot be ruled out. For traders, 16,350-400 would be an immediate resistance level for the market, as market has finally broken the levels of 16,400 and it closed below the same. Above 16,400, the index may move up to 16,700 or 16,800. On the other hand, as long as the index is trading below the mark of 16,850, as the Singapore Nifty is indicating, we are of the view that the next level to watch out for would be 15,900, 15,850. There the market is having next best support for the market, and from there we are expecting some reversal. For investors, our advice is to add strong companies between 15,900 15,850 with a medium to long term view, but buy in tranches. Our advice for traders is to trade in reversals or trade on reversals. The reason is because the markets are completely unpredicted and they are breaking their important supports. So till the market is breaking its supports on a day-to-day basis, that means the market is in downward trend, and if it is in downward trend, then it is going to follow the broader trend of the market, which is finding resistance at higher levels. So whenever the market is falling to important support areas, there we should look for adding some positions. If there is any reversal formation or at resistance level also, if there is any negative reversal formation, then we can go short on that market or on that stock. Global markets are completely into negative territory. Most of the indices are trading lower or in the red, and crude, which was around some 115, 114 levels, is now trading at 127. The all-time highest was 140, and yesterday it touched the high of 139. So the war is extending, and that is impacting to the world markets, and that's the reason today we are seeing huge amount of sell-off in the market. So the uncertainty is still there, and it is very difficult to predict that when the war will stop and all. So it is better to trade on reversal or to invest with a medium to long term view. That's all from my side for the day. With this, I am ending today's morning podcast. Thank you and have a great day to all of you.